Hello, everyone, and thank you for joining today's webinar. I'm thrilled to be joined by Peter Pappas, co-founder of Deep Markets AI. Welcome, Peter, and thank you for being here. I'm especially
Thank you for inviting me.
I'm especially excited about today's session because we're diving into how AI can contribute not just to portfolio construction, but also to outperforming traditional benchmarks. Index 1 calculates the Deep Markets AI Alpha 1 index. And this index represents an alpha enhancement strategy powered by Deep Markets AI's proprietary deep learning and artificial intelligence technology. Today, we'll be hearing from Peter about how AI is currently being used in capital markets, the core of Deep Markets AI's model, and how it was applied to determine the constituents of the Alpha 1 index. Peter, to start things off, can you give us a glimpse into the current AI landscape in capital markets and financial portfolios?
Yeah, certainly. Currently, AI it's an infancy stage, and by that I mean it's just been recently adopted by certain portfolio managers and institutional managers to enhance their returns on active portfolios. However, the results are not what they have been expected, and one of the reasons is because most of these current models right now are actually using only stagnant information to calculate their returns and their performances, which means they do not really adjust on a real-time basis or anything close to that in order to take into account any shifts, in policies, any shifts in data points, any shifts in trends. So everything is kind of like on a lag basis. So because of that, they still have not been able to outperform the indices or the benchmarks to date. However, for our model, it's very different. We actually have thousands of data points, and we do include technical analysis, fundamental analysis, capital market sentiments, micro and macro, and all the traditional elements. But over in addition to that, we also include trends in various stocks and various markets and various activities, and those trends are captured in a online real-time basis and incorporated into the next processing of recommendations and stock pickings. So that's more or less the difference between our model and the traditional model. The traditional models do not have the ability to do what we're doing right now because of the fact that the data points that we use are quite sophisticated and actually not necessarily understood or accepted by the general investment management industry. So they're very reluctant to use it. But we have been at the forefront of this technology since about 2020 and 23. And we've shown a significant return in our index because of that methodology.
Thanks, Peter. Now let's dive into Deep Markets AI's model. Could you walk us through how the model works and how it was used to create the Alpha 1 index?
Certainly. The way we created the model is, as I mentioned previously, we actually use the fundamental analysis, technical analysis. We use also micro and macro elements, and we build all the information, the public information, but also the sentimental information attributed to these securities and to these markets into our model. And once we have those in place, those data points, those thousands of data points, what we do is we monitor them electronically on an online basis, real-time basis. And by that account, any adjustment or any change in sentiment or trends or whatever is incorporated directly, into our model in terms of projecting, any future returns or any future changes to our index. So it's actually a very dynamic model. We use it consistently. We do modify it at times also when we see certain data points are really not producing any value whatsoever, and they're just kind of like including noise, in our system. We will drop them off and we will include other ones. But it's very dynamic. There is no written formula. It's just based on, where we are in point A right now and where we get to point B, and we try to explain the difference between point A and point B to its ultimate extent. So not only explaining it 95% of what made the change in the value, but also explaining it 100%. And I think that's really what gives it the intrinsic value over other models is we do try to explain the entire change in price fluctuation from one day to another, or from one point in time to another. And I believe that once you are able to make those explanations and account for any changes, to 100%, then you really have confidence in the fact that whatever your model is projecting, will result in a very positive return. And because of that, we have had significant success in the CSI 1000 for the past 3 years. We've actually beaten the benchmark by over 30% in every of those years, and are looking forward to actually introducing this model to various other markets globally.
Thanks, Peter. At Index One, we were really excited to work with Deep Markets AI on this. They've developed a compelling model that uses machine learning to construct a high-performing index. The index construction and maintenance process was seamless. Deep Markets AI sends us daily weights generated by the AI model through our integration system, and our platform automatically rebalances the index based on that data. So, Peter, looking ahead to the future of AI in indexing and investing, it feels like we're still in the early stages of this evolution. How do you see the space developing, and how might your AI model be applied specifically in international markets?
Okay. Since the beginning of time in asset management, in investing in public markets, there's always been this consistent relationship between risk and return. The risk of investing in a certain product or a certain security or a certain index versus the expected return. The more risk traditionally that you assume, the higher your expected return would be. But at the same time, again, the higher the risk. I think the real value in this domain of AI is really in terms of basically just upending the risk-return relationship. By that, what do I mean? I mean that we can actually retain a fairly constant risk attribute, while at the same time increasing the projected return based on AI, based on the enhanced information that's provided by the AI model. That relationship has existed, as I mentioned, since the beginning of time in this discipline. But if we can, prove otherwise, that we do not have to assume more risk to actually realize a higher return, then I think that's really where the future lies. Because to date, portfolio managers, active portfolio managers, including hedge funds, have had a hard time, especially in the past 20 years. They have not been able to consistently beat the benchmark. For example, the S&P 500 in the US, the broad market, or the technology, the NASDAQ 100, or the Asian markets, the CSI 300. So they have not been able, no matter what kind of resources and what type of portfolio managers and analysts they've employed, they've not been able to beat the indexing, which basically led to the realization that sophisticated investors have basically taken the money away from active portfolio managers because of the high fees, and just invested in index funds. Because of that, the whole active portfolio industry has really lapsed and has more or less shut down for the most part. A lot of these high-powered hedge funds that you heard about 20, 30 years ago no longer exist. They just went under. So I think what we're going to do is bring back active investing. What AI does, it brings back active investing. Active investing is defined, the goal of active investing is defined as realizing alpha. And the definition of alpha is basically the excess return of the index over the market return. So that's where a sophisticated investor, or any investor for that matter, would not mind paying an enhanced management fee to capture a higher return. But if they're not able to capture a higher return, they do not want to do that. But through AI modeling, we have been able to realize at least a 30%, alpha return for the past 3 years. And in the CSI 1000, where the market actually, depreciated over the past couple of years, we were still able to realize a significant positive return, not only over the negative return of the CSI 1000, but over the zero return, a flat return, which is pretty amazing. So I think that's where the future of AI is basically it's going to take away a lot of the business away from index funds and ETFs and bring them forward back, into active management, which has not, existed for many years.
Thank you for that, Peter. And thank you for sharing your insights on how AI can be used to construct strategies that are designed to outperform. To everyone watching, you can find the Deep Markets AI Alpha 1 Index on index1.io and also on Deep Markets AI's website at deepmarkets.ai. So for everyone watching, please feel free to now drop your questions in the comment box below. We'd love to hear from you and answer any questions that you might have. In the meantime, Peter, why did you hone into the Chinese market, and what markets are you hoping to tap into the future?
The reason we entered the Chinese market first is because our IP is actually based in Shanghai, in China. Our developer, our rocket scientist, he's based over there. He's a very successful hedge fund manager, and obviously we wanted to start this relationship, this AI indexing, was something that's familiar to him, and build on that experience, and then launch a similar product in the US markets, on the broad market. And we're thinking of also doing India. That's a very interesting market for us, and we have a lot of very talented people in that market that we can employ. But also we're thinking of doing possibly a commodities type of index. In South Africa, we have some people over there too, and Europe, of course. But our next major, market would probably be the U.S. and the India market. Where we're going back and forth between which one, first. We do have to launch these products sequentially. We can't launch them right away because of the limited resources, and we want to make sure we don't compromise on the quality of our resources. Just to get like 2 products out or 3 products out. So you could look forward to probably by the next couple of months, a product in the US or a product in India, and we hope to expand to Europe and South Africa shortly thereafter.
Amazing. We're looking forward to seeing that as well. And perhaps another question is, maybe you've touched a bit on this before, but how do you see AI in financial services and capital markets, especially in the futures options space?
Well, traditionally AI, the way it's used right now is to improve efficiencies and effectiveness, and qualities of products. So what it does, it's basically a huge database. It's a global database of logic with every specific product, and what it does, it allows you to enhance current products or processes. With capital markets, the product itself by definition is the future value. A capital market could be an option, it could be a future, it could be an index. When you talk about options and futures, those are derivative products. So automatically, derivative products, their values are based on the actual value, the intrinsic value of the spot product of the actual product itself. So those, so to the extent that the spot price of, for example, Apple is really off, it's not exactly what it should be, and the AI model could capture the real value, of Apple stock. The same thing with Apple options and Apple futures. It does not capture the real value. So once you rectify the situation, and once you're able to improve the spot price, the intrinsic price of these capital market products, securities, then by definition, it'll improve the actual value of the options and the futures specific to those products. So I think, it's actually going to open up a bigger market, not only with respect to, asset management in its traditional sense, with equity products, but also with derivatives. I think derivatives are gonna, because the derivatives are also leverage products. They do have the opportunity to realize a significantly higher return than their underlying stock products. So if you're able to, for example, realize an alpha on Apple stock of 20%, then at the same time, on the option of alpha, it may not be 20% increase, it might be 100% increase because of the leverage, associated to derivatives. So it's very exciting. It's actually very exciting for derivatives, even more exciting than it is, for traditional equity products.
Definitely. And just one other question. So I know at some point yesterday we talked about generation point 2. So where do you see, or when do you see that happening? And what should we expect to do to get to those stages?
I think the information is very important. Information flow is key. If you don't have information, you just don't know that certain data points exist. I think right now with the sharing of information and open source systems, information is easily accessible by anyone. But I do believe that the key will be in terms of data scrubbing, because at the same time there's a lot of false information or incorrect information that's put out there, for nefarious reasons. So it's very important to at the same time evaluate, the quality of the information that you are receiving and that you decide to use as an input product, to formulate your projection using AI. So that's important. So AI it's not right now, it's in its infancy stage. So what it does is it takes whatever information is available out there and puts it into a black box and comes out, with a certain projection. But it does not do anything in terms of scrubbing the information before it comes in. So I believe that's the next stage of AI. It's going to be the quality, of the input coming in.
Love that. Awesome. Thank you for that, Peter. We've just received a question from Lynn. Can you customize your indices according to specific client needs? Yes, absolutely. So the Deep Markets AI Index is also a custom index, and their AI model spits out the constituents. And what we do is we take that in through our integration channels and create a custom index. So, just to summarize, Index One, we offer an index calculation platform, and we offer a platform for clients to upload a file of weight and tickers, or even use our rules-based methodology to customize any index, launch it, backtest it, launch it, and then disseminate it through our various dissemination channels. So yeah, we absolutely have the capability to do that, and we hopefully will look forward to working with you. Awesome. I think that's all the questions that we have. Is there anything else, Peter, that you wanted to add to this conversation?
Yes, actually, I do. Our relationship with Index One, it's pretty new, and before that, we were struggling to get the quality information on a timely basis. We do value, unlike other, hedge funds or other active managers, we actually value our index on a daily basis, and it's unheard of in this business. And like I mentioned, ever since we've been dealing with Index One, we've had not only the actual return of the various securities on a daily basis, but all the incredible reporting that was shown before, on a daily basis. And that really makes a big difference in terms of your decision-making process, and in terms of, as an investor, the confidence that you have in the product. So, I just want to tip my hat to Index One, for the valuable reporting and able to do something that really is unheard of to be done on a daily basis.
Thanks, Peter. We appreciate that feedback. Awesome. Well, thank you so much again, Peter, and thank you to everyone for tuning in. We hope you enjoyed today's conversation and took something valuable out of it. We look forward to seeing you at our next webinar. Thanks, Peter. Thanks,
Thank
everyone.
you, Gayathiri. Thank you.